The budget 2026-27, presented by Finance Minister Nirmala Sitharaman, emphasizes a transition towards Viksit Bharat through structural reforms, fiscal discipline, and a strong focus on Yuva Shakti. Now, let us understand about the key budgetary notes that are discussed in the budget. First, new fiscal framework. The Income Tax Act 2025 will come into effect on April 1, 2026, which will aim to simplify rules and redesign forms for easier compliance. Second, infrastructure push. Public capital expenditure is increased to 712.2 lakh crores. This includes the development of 7-speed rail corridors, for example, Mumbai to Pune, Delhi to Varanasi, and 20 new national waterways. Then, sectoral mission. Launch of Biopharma Shakti. That is less than 10,000 crore for biologic medicines and ISM 2.0 for the semiconductor ecosystem. Next, fiscal deficit. Government aims to reduce fiscal deficit to 4.3% of GDP in 26-27. Then impact on normal consumers. Let us understand what is there in the budget for normal consumers and individual budgets. Okay, normal consumers and individual budget. Lower healthcare cost. Custom duty exempts. This budget exempts basic customs duty on 17 cancer drugs and adds 7 rare diseases to the exemption list for personal imports of medicines. Then we have reduced travel and educational cost. TCS, which is tax collected at source rate, and overseas store package is reduced from 5% to 20% to a flat 5% or 20% to a flat of only 2%. Similarly, TCS for medical treatment and educational remittances under the liberalized remittances scheme is also lowered from 5 to 2% only. Then we have cheaper personal imports. The tariff rate on dutiable goods imported for personal use is halved, that is 20% to 10%. Then we have ease of compliance. Small taxpayers can now use a rule-based automated process to obtain nil or lower tax deductions, certificates instead of manual applications. Then we have another point for support for women and youth. Provisions include the establishment of one girls hostel in every district for STEM students and the creation of she-marts to support rural women-led enterprises. What is the meaning of STEM? STEM stands for science, technology, engineering, and mathematics. All right. Now let's talk about few drawbacks in the budget. Transition to new laws. While intended to be simpler, the introduction of the Income Tax 2025 will require citizens to acquaint themselves with new rules and forms starting April 2026. Increased fees for delays. While some penalties are being converted to fees, taxpayers will now have to pay a nominal fee after December 31. While some penalties are being converted to fees, taxpayers will now have to pay a nominal fee after December 31. What will be the impact of this on the investors? Let's talk about the benefits first. Corporate tax rationalization. For companies shifting to the new tax regime, the minimum alternate tax, that is MAT, is now reduced from 15% to 14% and will be treated as a final tax. Then we have manufacturing incentives. Investors in strategic sectors like biopharma, semiconductors, and electronics benefit from expanded outlays and customs duty exemptions on capital goods like lithium-ion battery, energy storage, and critical mineral processing. We have real estate infrastructure. The government plans to accelerate the recycling of CPSC. CPSCs are CPSC assets through REITs. And what are REITs? REITs are real estate investment trusts. They are companies that own, operate, finance income-producing real estate across various sectors, allowing individual investors to buy shares in commercial real estate portfolios, such as office buildings, malls, and apartments through stock exchanges. Then we have something about foreign investment limit for person resident outside India. For person resident outside India, individual investment limits in listed Indian companies are increased from 5% to 10%, with the aggregate limit rising to 24%. Now, what are the drawbacks? For investors who are investing in F&O, higher transaction cost, which is called STT, securities transaction cost. Okay, the rate on future increases to 0.05%, which was earlier 0.02%, and rate on options premium increases to 0.15% from 0.1%. Also, consideration received from share buybacks will now be taxed as capital gains for all shareholders. Furthermore, promoters will be disincentivized through an additional buyback tax, making the effective rate 22% for corporate promoters and 30% for others. No deduction will be allowed for interest expenditure incurred in relation to dividend income or income from mutual fund units. What about sovereign gold bond? For sovereign gold bonds, capital gains exemptions for several bonds are now strictly limited to individuals who subscribe during the original issue and hold them until maturity.